both Mike and I as the founders, but also the rest of our senior team, have had significant credit and debt market experience prior to that. Experiencing those cycles, I think, informs you as to where opportunities sit, but how to actually manage the risk that comes with those opportunities.
Hi everyone, thank you for joining me for another very exciting episode in the executive interview series. Today we are joined by Tim Martin, founding partner of Causeway Asset Management, a firm that is specializing in private debt strategies in Australia. Tim, thank you for being here today.
Thanks, Rhythm. Very delighted to be here. It's a great opportunity, so thank you.
Tim, Causeway has been operating in the Australian private debt market for over 20 years. So can you tell us how this long-standing experience has shaped your investment strategy and risk management approach?
Yeah, 20 years plus actually. The business had its origins back in 2002. And prior to that, both Mike and I as the founders, but also the rest of our senior team, have had significant credit and debt market experience prior to that. Time in markets is critical, particularly in credit, and particularly in the space that we play. So, experiencing various cycles, and there have been quite a few over that 20 years. Experiencing those cycles, I think, informs you as to where opportunities sit, but how to actually manage the risk that comes with those opportunities. In the space that we play, there are no uniform risks and there are no uniform opportunities. So each one is bespoke, and part of the value proposition that we bring to the market and to investors is that we are a control lender. So we find the opportunities, we research those opportunities, structure the transactions, document those, and then manage them through the process, through the investment process.
Tim, let's dive a bit deeper into your current offering. So your firm operates two core strategies, the Causeway Flagship Fund and the HNG Causeway Dynamic Credit Fund. So can you explain the key differences between these two funds and how they cater to different investor profiles?
Thanks, Rhythm. Yep, two funds. So our core fund, or PDIF as we call it, is a senior secured fund. It has broad diversity. It is cash paid. So think a very stable, well secured exposure across a broad range of industries. So lots of diversity in that fund. So the diversity of both regional diversity. So we lend pretty much anywhere in Australia. We don't just focus on Metro, Sydney, Melbourne, Brisbane. Diversity across industry groups, diversity across collateral buckets. So we everything from there will be some property in there, although generally we're not focused on property as a core, and that is another differentiator. But there'll be some property in there. There'll be receivables. There'll be inventory. There'll be plant and equipment. The Dynamic Credit Fund is a go anywhere credit fund, if you like. So it can lend or participate across the capital structure. It can take greater concentration risk, but with that comes a higher return. It's still cash paid, and there are regular distributions, but there may be elements of deferred income or equity kickers in that fund as well. So it's for someone who is looking for a little bit of extra return, but with a little bit of extra risk. Again, these are all transactions, like everything. The management team participate and invest in every transaction that we do.
I understand. Thank you for explaining the two offerings, Tim. Now, let's talk about the market opportunity that you're addressing. So the mid-market and SME lending space in Australia seems to present a significant opportunity. So can you tell us, how does Causeway actually leverage its expertise to capitalize on this market gap that is led by traditional banks?
Sure. So the addressable market where we operate, which is that sort of lower mid-market space, is somewhere north of $500 billion of annual funding requirement, and most of those borrowers don't have traditional bricks and mortar security to get to be able to access a loan from a mainstream lender. That's also the sector where, it's the fastest growing sector, that middle market space. In Australia, in terms of entities, there's over 60,000 companies operating in that space. It's the fastest growing. It's where most of the innovation occurs, and it's a very significant employer. So there's a real opportunity set there. We believe that that's a space where we think that the returns that we can get on a risk-adjusted basis are very attractive. So we're getting a really good illiquidity premium, and we're also getting a very attractive risk premium for what we're doing there.
I understand. And it's very, like the way that you've raised the point, is very crucial to have the market knowledge as well. So that is very important. Now, Tim, speaking of expertise, your team boasts an average of 30 plus years of experience in credit markets. Yep. So can you tell us how this deep industry knowledge actually translates into tangible benefits for your investors?
30 plus years certainly in debt markets and credit markets, and 20, for most of us, at least 20 years in the private credit space. When we started, private credit really wasn't even a term. We spent a lot of the early days educating people as to where private credit or private debt sat as an asset, and for institutional standard or very professional investors, where they could allocate it, what bucket did it sit, where was it? So we've certainly been through that process. But again, and I think I've come back to this several times. Credit is a cyclical product, and the more cycles you live for, the more experiences you live through, the better you become at actually assessing, judging, and reviewing opportunities. So time in the market is critical in credit. So I guess it gives us the ability to assess individuals, to assess people, to be able to respond, and perhaps to look past the obvious sometimes, and to try and find where, dig a little bit deeper into the business, understand the business more. And because of our scale, we can do that. We can put someone with 30 years experience onto a $5 million transaction.
Absolutely. Well put, Tim. Now, as we wrap up, let's touch base on a critical aspect of investment management. So can you walk us through your risk management process, and how do you balance achieving attractive returns with preserving investor capital?
We're a control lender, so we don't participate in other people's deals generally. We find our own transactions, we research them. We do both industry research as well as research on the individual opportunity. We do all our due diligence, deep due diligence, which always involves site visits and being on the ground and digging through things. And that process can take 2 to 3 weeks of having generally 2 to 3 people working on that. We then document the transactions. So we have a panel of legal providers or legal services providers who do that with us. We document that. We then settle the transactions, and then we have quite a rigorous process of monitoring that and reporting. So our borrowers will generally report to us on a monthly, if not quarterly basis, and that's with quite a lot of detail. We maintain regular contact. We'll be touching base with most of our borrowers, on at least personally on at least a quarterly basis. But we're always available. We're always monitoring at different points in time, and also at different points of contact within the organisation. So we're deeply involved in these businesses without being invasive, but we certainly require a lot of clarity and and a lot of transparency from them.
Amazing. Well, that's wonderful. Well put, Tim. And thank you so much for your valuable insights.
No, thank you. It's been great. It's been lovely to chat.
It's our pleasure. For anyone watching, if you would like to get in touch with the team at Causeway, please see the details at the side of the screen or in the description of this video. Once again, thank you, Tim, and our team wishes you all the luck with your venture moving forward.
Thanks very much, Rhythm. Really appreciate it. Thank you.
Thank you.